Now, a Bank of Ghana report shows a decline in trading activities on the Ghana Stock Exchange for the first quarter of the year, mainly induced by the global impact of the COVID-19 pandemic. This has pushed investors to flee to safer havens like gold and the forex market. Now, stock market analyst Bertha Atubika joins us to make sense of this report. Great to have you on the marketplace, Bertha. First of all, tell us a bit more about why investors fled and are still fleeing the stocks for gold and the forex market.
Okay, thank you very much, Daryl. Well, it's not only they're not only fleeing from the stock market, but some of them are also moving away from investing or holding their funds in currencies such as the dollar to invest in gold. And there are several reasons why people would want to invest in gold. And one of it is to hedge inflation. And one of the factors that also move gold prices up is when economies are worsening or when most economies are not doing so well. And we all know what's happening right now with the coronavirus pandemic. A lot of people, a lot of countries have been impacted negatively. And a lot of equity markets too are also having the effect, the direct impact this time around. And looking at what is happening right now, people who want to have actually moved their funds from these equity markets to investment in gold because of these factors that are happening right now. The economies are worsening and people want to take advantage of that, and they are investing in an asset or a commodity that does well when the economies are not doing so well. And gold is one of these commodities that's doing well in a worsening economy. So that's one of the reasons, and they are also using it to hedge inflation because during this pandemic, we all witnessed what happened in Ghana before the lockdowns. Prices of goods and some services actually went up, and we saw inflation moving from the single digits into the positive digits, double digits again. It moved to 11.30, came down to 11.20%, and now it's 11.40%. And that should tell you the impact of COVID and how food prices went up. So people are trying to hedge from inflation and then also take advantage of the fact that gold prices do well when economies are worse.
I remember our last conversation, Bertha, when we were trying to look at the impact of COVID-19 on the stock market. Then we didn't really see the impact. Now we are seeing that trading activities have declined. Just how significant is this impact?
Well, trading activities on most African exchanges have actually declined. It's not only the Ghana Stock Exchange. However, one thing that is holding the Ghana Stock Exchange is just a few equities, like the likes of MTN, CAL, and then GCB. And let us not forget that the Ghana Stock Exchange, though is actively trading now with these equities, started from last year, where the financial sector cleanup had a direct impact because investors had lost confidence on the market and would want to move into other areas where they can actually have safe investments done. Or even generally, investments generally in Ghana was very low and people didn't have that confidence to invest in stock markets. And talking about the Ghana Stock Exchange and how it's impacted trading, well, some investors would just want to move out of the market because if you look at their portfolio, if they look at their portfolios, they realize that there are certain imbalances because most equities are losing. And if these equities are not paying dividends and are not giving me capital gains as well on the exchange, then I should look at other areas where I can make some gains within the short term. And prices of equities are also coming down. Probably I would want to come out now when there's a further drop, then I come back and then look at the long-term goal where I can make more capital gains.
Let's talk about what the impact has been also on the forex market and gold prices, because we have seen the price of the commodity gold, shoot up to record levels in the last couple of months or so.
Okay, so gold prices, for instance, has gone up to 2,000. It went up to above $2,000 per ounce, and we can say that investors were actually moving their funds from the equity markets to invest in this. And then one other thing that we can also see for the forex, for instance, is that, like I said, it's not all foreign currencies, but probably for me as an investor, I'm using myself as an example. If I would want to invest in any foreign currency right now, probably I'll be looking at the euro than to probably invest in the dollar. And my reason is simple. If you look at the European Union right now and you look at what is happening in the United States of America, you realize that US, because this current governments we know have been printing a lot of dollars from beginning of the year till now, and that means that there's a lot of dollars in the system, and that devalues your currency. When you print more dollars or when you print more of your currency, it devalues it. And if you look at the measures that have been put in place to actually curb this pandemic, you look at the European Union and you look at what is happening in the US, you realize that strategic measures have been put, or more prudent measures have been put in place in Europe than in America. And even in Europe, you realize that they have put in a 7-year plan going forward, how to go about with the economy, but we don't have that in place in the United States. So probably someone will look at these factors and say, okay, now that the dollar is losing value, I'd rather invest in the euro or hold the euro than to invest in the dollar.
Okay, my final question to you, if you can do that in a minute, what does this say essentially about our economy now?
The gold prices?
I mean, what we are seeing happen on the stock market, and the fact that people are investing their monies in the forex market and in commodities such as gold.
Well, it's just to tell you that investors would want to protect themselves as much as they can than to have losses being recorded regularly on the equity market. But one thing that I also like to say is that when prices are low on the equity market, it's an opportunity for people to come on board. Though people are willing to sell off at any prevailing price right now because they have some imbalances in their portfolio or they are recording lots of losses on the equity market, they should be able to withstand this particular period because it's just a time. And now if we get a vaccine for coronavirus today, or if there's a vaccine for coronavirus tomorrow, then it means that with the possibility of gold prices coming down is going to be very high. And because most economies are going to actually have this vaccine in place, and then are going to grow again. So it's one thing. We should be patient on the stock market, and once there's no vaccine as well, we shouldn't expect gold prices to come down.
Okay.
Let me just say this. Some markets are actually, or some experts are predicting that gold prices might hit $4,000 per ounce because of some of these this major factor that's there not being a vaccine for the coronavirus
pandemic. I would have to leave it there. Thank you so much. We'll continue the conversation subsequently. I appreciate all the thoughts and insights into what is happening on the stock market.